Welcome back, and there's only one place to start, Boxer. Well oversubscribed at the top range of the price, 54 Rand. It opened 63.01 yesterday, closed 63.51. Here's the proud CEO on their investment case.
We come from humble beginnings back in the early 90s, 5 stores. 2 weeks ago we opened our 500th store, and I think the investor community has really liked what we've shown them in terms of the consistency of both our turnover growth, the robustness of our business model that has withstood some challenging environments that we've had over the last 5 years here in South Africa, and also the long runway that's out there in terms of opportunity for further expansion and taking our Boxer superstores to more cities and towns in South Africa.
One of those original stores actually is the one in Pinetown that you would know in the taxi rank.
Oh, really?
Yes. So obviously this is homegrown for me.
So fun fact, Pick n Pay bought this in 2002 for about 36 million. I mean, this is almost, it's not a 10 cent, but it's
been a great story.
This is Cinderella.
Yes.
Yes, yes.
I just, in fact, I tweeted Cinderella because it's been there in Pick n Pay all the time.
Yeah, for 20
all
plus
along.
years.
Yeah, no one discovered it. All of a sudden, Cinderella comes to the ball and saves Mr. Summers, you know. But, I mean, it's been there, and it hasn't been in the valuation. Why all of a sudden?
Because when you value a company that's got many parts, you value it on the horriblest part.
Yes, so the horriblest part, according to my valuations, and here we have head of research, is something like minus 5 billion or something.
I know. Help me with the minus 5 billion.
Yeah, so that would be the worst case scenario. But we did a sum of the parts. Obviously, you guys know I'm such a nerd. So,
That's why we love you.
you put a holding company discount on Boxer now, the 65% that they still have, and then Pick n Pay's valuation is around 8 Rand to 11 Rand within Pick n Pay's price, and then you get to about the same valuation that it is trading at right now. So this Pick n Pay stock doesn't look particularly cheap, even with Boxer at these current levels. But Boxer, I think, is also an interesting one because it does look expensive now, but I do think that the returns that they're generating and the excitement around the growth prospects that are really, really good could actually sustain this rating at the moment. I just don't see it going up by much more.
My whole point, Chantal, was it's been there all the time.
Yeah. We just
It's
didn't
not,
notice.
it's not as though this is
That's how
plucked down.
value is realized. Sometimes it's just staring at you.
I've
right?
lost respect for the analysts.
Sometimes companies just need to disclose better, then we'll be able to value them better.
That's a great
Because
that's
Pick n Pay never reported
Yeah.
separately on Boxer. They only recently started reporting separately and only on the top line for Pick n Pay
Because of
clothing,
pressure.
which is also a good business. So we need more disclosure, then we'll be able to value the
Have
companies
accepted
better.
your defense.
Yes, that's a great defense. So because it's from Pinetown and it is my old hood, we should be holding some Boxer.
We should, I think.
Because I've got
It
mine
only
in
makes
the
sense.
market to sell.
Yeah, you must
Slightly much higher price.
support your own, support local.
Look, me and Pinetown were never besties. But anyway, Vukile is the little REIT that can local township malls and a whole bunch in Spain, and good results to boot. Here they are on rental reversions.
I need to point to a few things. We've had a few reporting periods of positive rental reversions, which already is very positive. When we look at this last 6 months, 85% of the leases reverted positively or flat, which shows you a very strong degree of enthusiasm. There are always going to be some leases that will go backwards. On average, we saw a 1.6% increase in reversions. And that, in fact, was really pulled down only by 2 leases. If we exclude those 2 leases, the actual broader portfolio was up by around 3.3%.
So we have a question for our head of research here. I mean, Attack at great numbers. Okay, we had Hyprop with great numbers. Eastern Europe looking good. We have Vukile saying the same thing. Eastern Europe is looking good. These companies, on average, they're up 80% this year. Well, on a 1-year basis. Sorry, Attack being obviously on the lower end as usual. So. Are they overvalued currently?
I think that they're a little bit too expensive currently. So I think I still like these guys as a really great portfolio diversifier, really great for income generation.
Are you talking Vukile now?
REITs.
Okay.
So, but I would get involved with these companies probably at lower levels. Where I think there's still value is the UK REITs that are listed on the
They
JSE.
still got the hospital one that
They've got PHP. They've got the new hospital one. They've got Shaftesbury, which is a fabulous business. And then the other one that's listing soon, and I can say this because the JSE said it on the radio yesterday, is Supermarket Income REIT. They only invest in supermarket properties that are kind of anchored by Tesco, Sainsbury's, and Carrefour in France.
Careful, yeah.
Super interesting.
Okay.
We get a whole new little sector popped up on our market. I didn't even know the health one had come. David, REITs.
He's not convinced.
Really?
No. If you really like shopping centres, I've got a few to sell.
No, we're
Big
good.
big ones, nice ones.
No
Okay.
thanks.
Reach to health. The pandemic was a horror show for hospital stocks as we all avoided hospitals, well, like the plague. But Netcare results looked okay. I guess he has CEO on improving margins.
Well, in truth, it's very hard to increase or even maintain margins in a market where we're seeing hyperinflationary increases. Electricity was extremely high this year, other utilities and other costs coming through. So it's a constant battle. I would say that our digitization strategy that's taken us 6 years to roll out is bearing fruit. We had forecast to save 120 million in both cost avoidance and cash costs, and we were able to actually save close on 190 million.
It worries me when growth comes from saving spending. Yes? David, do you buy a hospital stock? Even hospital or REIT?
No,
You're gonna
first of
leave.
all, I don't wish ill health on the community. I know, you know what I mean? I don't want to make profit out of somebody getting sick, but it's a tough industry.
Yeah.
You know, and when Richard was speaking, I've had reason to be in the Linksfield clinic and so on. So, yeah, the operating rooms are great and everything, but when you go into the rooms, you know, I'm talking about the operational on that side, on the medical side, but the rooms are old. When you look at the TV, it's like flying SAA.
Yes.
You know, we get these old... and
I was in a hospital that had a
and you
CRT
just
TV.
realize how much money still has to go in there just to maintain these businesses and that. It's, you know, for me, I'll leave it to everybody else.
It's almost like some of the same dynamics that we've seen in the hotel industry. So hear me out. They are very dependent on occupancy, right? The higher occupancy, the better margins are. But they've been struggling to get back to pre-COVID occupancy. CapEx has fallen behind. That's why you have hospital rooms not looking great at certain facilities. That still needs to be spent. So I don't know if they're going to benefit from international travel the way that our hotel groups are. So I don't think it's the best spot for them right now. Perhaps a
And the
kicker,
valuations are not cheap.
but perhaps a kicker for them will be NHI.
Well, yes.
If it ever happens, which
pushes
we don't
occupancies up.
know or think it's going to happen at this point in time in its current format, but it will push up the occupancies. But I'm on the sidelines with this one. I think you can get better opportunities elsewhere.
Yeah,
Just before I get into trouble with Richard, quality of the nursing staff and everything
Yeah.
just looks tired.
It is
You know, the
tired.
hospital looks tired.
Yeah, that's the one I've gone to as well, the Linksfield one. I think you should contact someone in production, contact Richard, get us the Netcare black cards, please.
Netcare black cards?
Exactly. I learned something new.
Okay. Like VIP at Netcare.
Yeah, exactly.
Now I don't want to go there again. No, I'm trying to avoid
I'm trying to avoid hospitals. Purple Group swung to a profit as investor deposits increased 27%, and their Thrive program made them a good chunk of money. It's a good-looking local market, in a good-looking local market. Surely a good-looking stock. Or was it too small for everybody aside from me? I hold Purple. I'm doing great.
So much fuss over purple.
Yes.
I know.
They're up a whole bunch this year, and they made money.
$1.5 billion. What's the
I
market
don't think it's
cap?
that much.
So for
And it's
me-
a PE of about 100.
Yeah, look, I think they do an incredible job. And you can see that everybody appreciates them because they got 50% allocation in Boxer. We got nothing. What did you
Yo.
Not 50.
See what I mean? Because they got a mob of over 800, close to 900,000, individual retail clients who
900,000.
stand strongly behind them.
get? So each one's going to get one Boxer share.
It doesn't matter. They got them, we didn't.
My only thing with stockbroking as a business is it's very dependent on how the market
Activity,
performs and
yes.
very dependent on flows and activity. And this tends to be quite cyclical. So you will have years like this year where things look really great, and then as soon as volumes start drying up and the market starts going down and investors lose interest, it'll be a tough year again. So you need to think about that.
We
when
need
you're
another
investing in the
COVID
stock.
where people save a lot of money, have nothing to do at home, start gambling on it.
Yeah,
Yeah.
no,
Stock
100%.
markets. Yeah.
They're the stocks, you have to remember to sell them.
Yeah.
That's the hugely important part. And I'm really good at buying. Selling is
Really
like
bad at
the selling part.
It's my biggest
I
bias
sold
as
too
well.
early. My worst is I sold like 80%, and then the other 20 goes all the way back down. Quickly, Barlow, they got problems with Russia. They got a weird deal going on. They got tough results.
Still like them.
Still like them.
Still like them. They're probably going to look even cheaper, but I mean, I'm still a holder of their BE shares, so I'm here.
Oh, you got the BEs.
Yeah, you got, yeah.
That's the
Yeah,
properties,
okay.
right?
Yes, correct.
That's really cool.
Yeah.
It's a cool structure. I really like
The
that.
whole
BE
deal looks a bit dodgy. I don't
The
know.
takeover deal looks
This is-
dodgy, not
this
the
is
BE deal.
Not the BE deal. This is
Oh,
not
the
the
takeover deal.
dilated
Oh, no, yeah.
But the takeover deal, it just feels wrong. So I'm avoiding it just because it feels wrong.
No, you did right.
Yeah.
Why did we not discuss data?
Yeah, okay, there we go. We've got half a minute.
There you go.
What?
It'll take 2
spotlight.
hours to
It'll
discuss
take 2 hours.
this deal,
Spar, what about Spar? They still got SAP
yeah.
problems.
They got problems.
SAP problems still going to be there 40 years from today.
You know,
Ask
that's-
me in 40 years, it's still going to be there.
I just
It's
keep
very
saying
hard.
that.
to
Why
do
does
that
anyone phone SAP?
We spoke to the management team of Afrimat yesterday, and they were talking a little bit about the Lafarge integration. And one of the things that they're doing is decommissioning SAP at Lafarge.
thing. There you go. SAP doesn't work.
And I like that for them because SAP is a disaster when you implement, and I guess the opposite will be true. It'll
Yeah.
be great if you
Take
get
it
rid
out.
of
The
it.
alternative, Microsoft or
Excel, man.
Plenty,
Just use
Excel.
Just use X. Just
Come on, you're
keep it
selling
simple.
cement with respect. In this case, I mean, I appreciate that groceries is a little more complex.
I just think, just going back to Spar, you just realize how accounting is such a fraud because you can put whatever results you want out. When you go through the actual results, this is not a pleasant, this is a company that's
Yeah.
still going to face lots
But
of
at face value, it looked great.
That's what I'm saying.
That's the
Because
issue.
the accounts allow you to
Yeah.
kind of
That
puff everything up.
says the
Yeah.
accountant.
I'm not that negative. The only reason it being that in the results presentation they said that they have had interest in Spar Switzerland. If they can sell that at the valuation that they gave to analysts, they can bring down their debt by 60,
Okay.
70%.
They can-
Yeah, we come
It
into
sounds like Mediclinic again. It sounds like Mediclinic.
And finally, a little under half of US voters voted for the felon, which means a bunch didn't, and many are not happy about another 4 years of wild rage tweeting. So in an attempt to boost its flagging population, Oriola, I don't know how to say it, on the island of Sardinia is selling some dilapidated properties with a website that reads, "Are you worn out by global politics, looking to embrace a more balanced lifestyle while securing new opportunities? Time to build your European escape in the stunning paradise of Sardinia. For mere €1, they will give you a dilapidated building and a passport." Who's in? I'm keen.
Incredibly tempting. Do they have decent schools?
Oh, I'm worried about internet. You need schools. David, you need healthcare.
No, it's just such a beautiful part of the country. I mean,
One
the-
year.
You don't- no, but you don't have to worry about all of that because you're going to get a European passport. You can live anywhere in Europe.
That is very true.
So you think long term, guys.
Okay,
I
we
can't
might not
teach
be
you.
here next week, is what you're saying. Sardinia, here we could do the show from
Sardinia, that's
Sardinia.
marvelous.
We'll leave it there. David, Chantal, Bright, thank you. Everyone at home, have a great evening and an even grander weekend.